Good morning, Steve Free in Chicago with the morning grain comments. Well, prices are lower overnight. I think it's kind of a combination of the market realizing that the pro-farmer corn and soybean yields that they're finding across the Midwest is not as bad as it could be, and maybe justifies the USDA's August corn and soybean yields. Overnight, there certainly was a big variance in the Iowa corn yields based on dryness and if there was any damage from the storm. But the pod count continues to be above year ago and 3-year average. I think the tour stresses, though, that the crops need a good rain to make sure that they achieve the yields that they're forecasting. As far as weather is concerned, the maps are still having problems with next week's rain event. A lot of it has to do with where the tropical storms move and if they rob the U.S. of moisture as the front moves across. Right now, it looks like everybody is going to get a drink of water next week. It just depends on whether the amounts are half an inch or over an inch. And certainly the crop needs about an inch of rain. There's also maybe a realization that the COVID is going to be around for a while and it's going to continue to have demand destruction both here in the U.S. and globally. So not only are we seeing a weather premium taken out of the market overnight, but we also might be seeing a demand premium taken out of the market. Many feel that the USDA is just too high in their estimates of U.S. and global demand based on the impact COVID has had on demand and also economies. So we'll be watching to see what the pro-farmer says today about the rest of Iowa and Minnesota. And then we'll see tomorrow what final corn yield is. And the market will have to decide whether or not it wants to hold on to its soybean long or whether or not it wants to add to its soybean meal, corn, and wheat short positions going into harvest and this fall. Many of the economists are back thinking about these corn below $3 and November beans below $8, and wheat basically following the corn market. In the wheat, there is concern about not enough world trade, not enough world demand, not enough domestic demand for flour to move prices substantially higher. Chicago nearby contract might be in a $5 to $5.50 trading range, but we could test the lower end of that range through the Northern Hemisphere harvest. We'll also be watching Argentina. There's a chance that next week they might get a small amount of rain across the dry areas, and then as we progress into September, they may be seeing more frequent showers. Again, there was talk about overnight that La Nina could be stronger in 2021, which sometimes means dry weather for southern Brazil and Argentina. So we'll be kind of watching that also pretty closely. Finally, there's some numbers out that the U.S. farmer might increase winter wheat plantings this year versus last year. That's based on just the competition between wheat prices now and corn and maybe soybean prices down the road. So I think in general, you're seeing a bearish bias today in the grains. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day. And remember, treat people like you would like for them to treat you.